you know, lots of people have been thinking what would be the distortion of the price discovery be, for example, on Bitcoin, where you have like real Bitcoin, which is better asset, but also the paper Bitcoin existing next to it, right? Because paper Bitcoin may at some point have this effect of watering down true demand. Because, instead of you come to me, you buy Bitcoin from me, but I can give you just an IOU, even though I don't have the underlying asset. And you will believe me. And that's kind of like a sort of a promise, but it's not really there. And the problem with promises is that, they're only as good as the counterparty that is willing to keep those promises and fulfill them, right? Because if promises are broken, then at some point someone will end up, left holding the bag, right? So that's also the big problem that I can see that the paper you really need to think about that this is always an IOU, I owe you, and it's a promise. I promise you that Bitcoin that you're seeing on the screen is there. But if you don't give me, some kind of verification mechanism where I can just see it on the blockchain or see it under a separate address, etc., some proof of reserve, then it's just it's just running on trust, right? You need to really keep that in mind. Now, systemic risks, yeah, systemic risk, that's the problem as old as, banking, really, from 19th century. At some point, if the paper is redeemable into the real thing, right? And in the past, you had banks that were holding the gold in a centralized vaults, and they were issuing a paper money, and that paper money was basically a promise to give you back your gold, right? Even US dollars was in the past before Nixon shock was redeemed, and even sooner around before Roosevelt, it was redeemable, so you could literally redeem your paper, take your US dollar to the bank, and get gold in exchange. So if that were happen, if you own the IOU like a paper holder, then if everybody wanted to redeem their gold or any asset or Bitcoin at the same time, there that could lead to collapse and some kind of a bank run, right? Because if the promises are not kept and reserves are not really one-to-one, so amount of paper corresponds exactly to the amount of underlying assets, then basically that institution will go bankrupt and there will be a problem and someone will be left holding the bag, the worthless paper, right? So that's also one of the risks. And finally, I wanted to emphasize the fact that, it's easier to seize gold, it's easier to seize paper Bitcoin than Bitcoin itself, right? If you have real Bitcoin and you're keeping it in self-custody, it's way harder to confiscate that Bitcoin versus the Bitcoin that you bought in ETF, right? Or on some other instruments. So I would say the paper Bitcoin is kind of a Wall Street's way of, taming that wild horse that we call Bitcoin. But Bitcoin was born to run free. I mean, it's a beast. And, it's always going to be representing that freedom aspect. That if you really want to be self-sovereign, you take ownership of your own Bitcoin, and this is not going to change with a paper Bitcoin.
Amazing. Now, let's see some of the arguments why people believe there is paper Bitcoin, and then some counter arguments why people don't think that paper Bitcoin exists. And then I'm going to be very curious to hear what you think and which of the two sides of the argument you're supporting. And of course, I'm going to share also what I personally think is happening. So the main argument that everyone right now is raising is the crazy purchasing power from ETFs and also from Bitcoin treasury companies. The first example I have is the week commencing 26th of May. So we had over 2.5 billion purchases from Bitcoin treasury companies. ETFs, they bought over $500 million. The stock market went in a nice way up with over 2.5% on average during this week. And then the Bitcoin was down like $2,000. how it's possible to have almost $3 billion inflows, the stock market in a perfect health, and then the Bitcoin going down. That's like the argument. Something is not correct. Like the Bitcoin price was supposed to increase when there is this unbelievable demand happening for a period of a few days. Then another example. What's happening in June, around June 22nd? 1.5 billion of inflows from ETFs. This was like a very strong week for the ETFs. We had the strategy that they purchased over $600 million. So in total, 2.1 billion. I don't have data for other Bitcoin treasury companies, but let's assume they also purchased a few $100 million. So you had more or less 2.3 billion of inflows coming to Bitcoin, and then the Bitcoin price was completely flat. Again, like the stock market was fine, no bear news. Suddenly, like nothing is happening with the Bitcoin price. And now compare those the situation where we had like weeks with $2-3 billion dollar of inflows and the Bitcoin price either decrease or stay flat. Now compare it with last year when the ETFs were not enabled and we had like inflows of 100, 200 millions, not billions per week. And the Bitcoin price, we had weeks where the Bitcoin price increased with $3, $4, $5,000 without having those crazy inflows. Something is strange here. I believe everyone will agree that we were supposed to have Bitcoin price appreciated probably to 200, 250,000, even without like those crazy inflows. Comparing the trend we had now with the trend we had 1 year ago. So those are like the main arguments. I personally think some people using those arguments are a little bit disappointed that the Bitcoin is not at 500,000 already. But then at some, I mean, if you see it from different perspective, like that's the data, you cannot hide it, and something is not clicking properly. Then you have strategy refusing to show the Bitcoins that they own to do a proof of reserve. You have Coinbase. Coinbase arguably is one of the most popular centralized custodians. Almost all of the ETFs are using Coinbase to store their Bitcoins there. And Coinbase is refusing to show proof of reserves. Like BlackRock is using Coinbase. Why Coinbase is not showing the Bitcoins that have been purchased there? Those are still open questions and no one can answer. Some people argue, but it's because of the security. Come on, everything is on chain. You can see where the Bitcoins are moving, and no one can really go and steal your Bitcoin from your cold wallet or even hot wallet, doesn't matter. Why Saylor, why Brian Armstrong are not coming and showing their proof of reserves for the ETFs and for the strategy? And then the counter argument here is the unbelievable volume of OGs selling Bitcoin. I actually wanted to show you one chart which is highlighting the volumes. So see what's happening, especially in January, we had over $4 billion that have been sold for a period of a few days. Like this spike here was when the Bitcoin first hit 100, or it was around $100,000. And then see what's happening in July, like almost 2.5 billion of OGs, or like let's say Bitcoiners selling. And now that's the interesting part. Like there is this very popular narrative that Bitcoiners are never selling their Bitcoin, but what we are seeing on chain is that people are actually selling, and they're selling significant amounts of Bitcoin, and they're selling at levels that haven't been seen before. Now,
Which
like,
makes sense. Which makes sense.
sense.
The only thing more scarce than Bitcoin is actually the human time. Our time on Earth, right? If you bought it into Bitcoin, if you started with it in 2010, 2012, 2014, 15, your stack appreciated so much that it may be a good idea for you to realize some of those profits and actually, improve your quality of life or send your kids to the